All right. Good morning, everybody. Good morning, everybody, and happy Wednesday. Today is October 30th, 2024, just a day until Halloween. And guys, there is a ton of things happening today. We got a whole bunch of earnings out. We got a whole bunch of economic data, some good, some bad. We got a big development that just hit the tape a few seconds ago. But before we get into all of this jam-packed show, we got to talk about possibly the single most important economic development in the history of the world. Google owes Russia $20 decillion. All the money in the world times a few million. By the way, 20 decillion. That is a 2 with 34 zeros coming after it. That's how much Vlad and co. say Google now owes Russia because they've been censoring Russian content. And guys, I mean, this is catastrophic because surely now Russia will sell bonds against the future cash flows from those inevitable debt payments, use it to finance the world's most amazing military industrial machine that is ever seen, and Vlad's armies will sweep across the world and conquer everything, and we'll all have to learn to speak Russian. No, it's not happening. It's a joke. But honestly, guys, I had a hard time coming up with the title today. That is a real story, by the way. Russia does say Google owes them 20 decillion. Is that how you say it? Decillion, a lot of bucks. Russia says Google owes them. Don't hold your breath, Vlad. Google ain't paying. Anyways, guys, we did get earnings from Google this morning. They were pretty good. Cloud revenue up 35% year over year to $11.3 billion. What else do we have? Net income up 33%. We had search revenue up 12.3%. But there was also a lot in there about efficiency, about cost reductions. Basically, Google's talking an awful lot about layoffs. So once again, we're seeing like, yeah, AI is making us a little bit of money. Mainly it's cloud revenue, which is them renting out their data centers to customers who are paying with Google's own money, i.e. massive round tripping schemes that run rampant in the AI mania, this massive freaking bubble that the world has developed. But at the very least, they are seeing some revenue growth, but layoffs. So that's the one thing. Yeah, we're going to bring in plenty of money with renting our data centers, and we're paying to build those data centers by cutting our people. Big tech layoffs, more of them are coming. Also, on terms of the AI mania, guys, this just hit the tape a couple of seconds ago. And if I'm like stuttering this morning, it's because my brain is still processing this. Supermicro Computer, ticker SMCI. Ernst & Young has just resigned as their auditor. That is huge. Supermicro stock is getting crushed right now. Maybe this is the pin. Maybe this is the pin that pops the AI bubble. I don't know. Supermicro is not the big one. NVIDIA is the big one. But Supermicro is NVIDIA's second or third largest customer. And they're frauds, guys. Let's just call it what it is. They're outright criminals. All right. The Orca Fin did an excellent report on Substack. He's now on Beehive, by the way. Follow the Orca Fin on Beehive. He did fantastic research about the related third parties that Supermicro was withholding and failing to disclose. Massive accounting fraud. Hindenburg Research took his work and took it a step further. They also looked into things like a whistleblower lawsuit and sanctions violation in Hindenburg's short seller report. A day after that report came out, Supermicro delayed their 10K. It's now been months since that happened. And just this morning, a few moments ago, Ernst & Young announced that they are resigning as the auditor of Supermicro Computer. And I told you that would happen. I told you the next thing we're going to hear about is Supermicro's new auditor. I said it on DNN. I said it on here. Well, there it is, guys. Nobody will sign off on the books because these guys are a bunch of lying a-holes and crooks. And wait till you hear the quote from Ernst & Young. Damning. Just an absolute damning quote from their independent auditor. And by the way, Ernst & Young, why is the Orca Fin finding this stuff and you guys aren't? Huh? Why is the Orca Fin on Substack able to dig this stuff up? He doesn't have access to the books. You guys do. Maybe it's time to actually start auditing. Maybe it's time to actually start opening the books instead of like, okay, here's my $1 million check. Here's your rubber stamp. Go sell stock. Because that's what Ernst & Young did. It wasn't until the Orca Fin called them out that actually came to light. All right, A lot of other stuff going on. Besides the fact that this AI mania, which is largely just one massive accounting fraud, is driving up big tech earnings to astronomical proportions, we've also got the bifurcation of the world economy is on full display today. Because, yeah, Google's earnings were great. Caterpillar's earnings, not so great. Construction equipment sales down 9% globally. Down across the world, guys, down in the US, they're down in Europe, they're down in the Middle East, and they're down in the Asia Pacific region. We're not building things, but don't worry because AI. There's your bifurcated economy right there with Caterpillar earnings. Caterpillar stock getting hammered this morning. Another big one, BASF, the German chemical giant. Their earnings are down big. Asian markets, sales down 10.5%. Right. And BASF makes everything, guys. They're a chemical giant. So they touch everything. A 10.5% decline in China sales. Also a big decline in auto sales. They're saying chemicals that go into automotive paint are down, as well as electric vehicle chemicals. I'm assuming that means lithium for the batteries. So it looks like autos in China dragging down BASF. So look, big tech earnings doing great. Caterpillar, BASF, not so much. So all the imaginary shit is selling like hotcakes, but all the real things, that you can touch, not so much. None of that stuff is moving. We also got a lot of economic data. We got JOLTS came out yesterday, 7.443 million job openings in the United States. That is down sharply from 7.99 million last month. That is a 418,000 job opening decline. That's a big miss. Also, last month's numbers was revised lower by 179,000. So the job market, guys, just not as strong. That has been falling precipitously. It was a big miss for job openings. So that's showing some weakness in the labor market. But then this morning, we got ADP private payrolls, and they look great. According to ADP, 233,000 jobs added versus 115 expected. So a big beat for ADP private payrolls. Up from 159,000 in September, plus a 12,000 upward revision to last month. So ADP payrolls looking pretty good. JOLTS looking pretty bad. We get the final answer, the big jobs number on Friday, last jobs number before an election. I'm sure it's just going to be a glowing endorsement of the current economic climate, followed by big downward revisions later. Also, rounding out the earnings front, we had AMD reported revenue was a slight beat, earnings in line with estimates, but that stock is getting crushed this morning, probably because their guidance was a little light. They actually forecast a revenue decline. Not a lot of talk about that, but that's another dent in that narrative of the AI mania here. AMD down big ahead of the opening bell. We got GDP came out today. It was a slight miss. The U.S. economy grew by 2.8% in the last quarter versus 3% or 3.1% that was expected. Big bump in consumer spending, 3.7%. That's being driven by credit card debt and buy now, pay later vendors. And government spending up 9.7% from a year ago. Guys, picture where we were a year ago and how we were all talking about how ridiculous government spending is. It went up almost 10% since then. That is how ridiculous. And it just makes me say, hey, Russia, shut up about the whole Decillion thing. Congress will hear you, and they'll think they can do that. All right? So Congress, please don't spend $1 Decillion. On behalf of me and everybody else who has to pay for this shit, please stop. You need help. Defense spending up 14.9%. So there's all that money we're giving to Ukraine. We're giving them all our old our old military equipment. They're feeding it into the meat grinder, fighting against the Russians. We're using the money to buy new equipment. It looks like GDP growth, but really we're just blowing things up and killing people. And last but not least, we got UBS earnings. They were pretty good. They're doing all right with their integrating Credit Suisse after the big merger from last year, but they guided a little light, so that stock is down. Guys, we're drinking from the fire hose this morning. There is a lot going on today. Let's shrink my big melon of a head and let's get through some of these stories, shall we? And don't forget that like button for the YouTube algorithm. Really helps me out. And if you're new here, hit subscribe because we do this every morning. So come and have your coffee with the melon heads. Right now, the S&P is just barely negative, 1.3 points lower, 0.03% in the red. We've got the Dow, though, besides a pop-up. Dow is negative here by about 37 points or 0.09% lower. You see that big red candle there at about 6:30 a.m.? I believe that was Caterpillar's earnings there. That's what took the Dow down in that big step change there, and it's been trading pretty much flat ever since. But 0.09% lower, not a big move in the Dow either. The NASDAQ, meanwhile, is down 21 points or 0.1%. I think Supermicro is probably going to be a bit of a drag on the NASDAQ today, but that's being partially offset by Google's earnings here. So it looks like we got all three indexes are in the red. We had 2 out of the 3 were in the green just a few minutes ago, hence the bull icon this morning. Looking over at the DXY, we've got a slightly stronger dollar by 4 basis points at 104.36. Not a lot of movement in the dollar here. And interest rates are finally heading lower, at least on the long end today. We got a little bit of a mixed bag here since that economic data came out. But at the very least, the long end of the curve is taking a break this morning. 30-year down 4 points, 4.478. The 10-year is at 4.257. That's down almost 2 points. The 2-year, meanwhile, is up 1.5 points to 4.135. And the 1 month is sitting essentially unchanged at 4.748. So long end, the 10 and the 30, they're taking a little bit of a break here this morning. Looking over at commodities, we've got another all-time high in gold. Spot gold, $2,785, almost $2,786 here. That's up $11 or 0.4% higher, a new all-time high in gold. And also important here, guys, December gold futures, very briefly, were above $2,800 an ounce this morning. We did not spend very much time in the 2,700 range. Gold is on an upward trajectory and continuing. Gee, you think it might have something to do with the fact that government spending is up almost 10% from the ridiculous level it was a year ago? You think maybe that's got something to do with the fact that gold is rising on a daily basis? Spot silver, meanwhile, not doing quite as well. 34.07 for my favorite of the shiny. That's down about 38 cents or 1.12% here this morning, although holding above $34. We've got copper's down about 0.4%. Platinum is down 2.75%. Palladium's taking a big break here, down 5.8% to 11.56, although palladium has had a pretty good run in the last couple of weeks. And crude oil is up $1 here, 1.55% higher at 68.25, still in the high 60s for WTI. And keep an eye on Bitcoin, guys. We were above 73,000 very briefly yesterday. We hit as high as 73,500 yesterday. We're pulling back a little bit now, 71,840. That's down about $885 as priced on Coinbase. All right, let's get into some of these major stories here. First, let's talk a little bit about Alphabet's earnings. They were pretty good here, right? Alphabet shares rise on earnings beats boosted by cloud revenue. Cloud revenue, guys, that's where their AI lives. That's also, I think, where their data center revenue comes in from. So when you hear cloud revenue, that's their software, that's their AI. It was a pretty good number for Google, all right? Google parent Alphabet reported third quarter earnings that beat on top and bottom lines with strong revenue growth from the company's cloud unit. Company shares rose as much as 6% after hours. Alphabet's revenue grew 15% year over year, which is stronger than the same quarter last year. The company reported blowout cloud revenue of $11.35 billion, up nearly 35% from the $8.41 billion a year ago. The company attributed its strong cloud results to its artificial intelligence offerings, which include subscriptions for enterprise customers. So good numbers for Google here. Now, I want to scroll down past all of that. And this language right here is a little bit alarming. Turning to AI for more cost cutting. And again, when you hear cost cutting, you need to be thinking layoffs because that's what they mean. Alphabet plans to build on existing cost cutting efforts around using AI to streamline workflow and manage headcount, again, layoffs, and the company's physical footprint, said somebody named Ashkenazi, something I can't pronounce. I plan to build on these efforts, but also evaluate where we might be able to accelerate work and where we might need to pivot to free up capital, i.e. cut people, for more attractive opportunities, said this person who joined the company in June after 23 years at drug maker Eli Lilly. So, I mean, they're basically saying, guys, we're going to keep laying off people to buy GPUs and build out more data centers. So you got more job cuts are coming. My guess is they're probably going to wait, and we're going to hear about that in January. That's usually when we get the announcements of tens of thousands of layoffs from big tech. And of course, the rather hilarious story that's driving the title. Look at that number, guys. That is not a typo. Russian court fines Google $20 decillion. Look at all them zeros. Don't hold your breath, Putin. A Russian court has ruled that Google owes Russian media stations around $20 decillion in fines for blocking their content, and the fines could get bigger. To put that in perspective, the World Bank estimates global GDP is around 100 trillion, which is peanuts compared to the prospective fine. Google would therefore have to find more money than exists on Earth to pay Moscow. So I guess Google's going to have to hire some congressmen to figure that one out. But on Tuesday, they fell a little short of that mark when they posted just $88 billion in quarterly revenue. Yeah, don't hold your breath, Vlad. That's kind of funny. All the money in the world is going to Russia. Alphabet stock is up 7.25% pre-market here, trading at $183.58, up almost $12.50 here. So year to date, Google's had a pretty good year. They started around 137. Looks like they are going to continue that run today. Now, guys, we got to talk about this one because this just hit the tape a few minutes before I hit that live button. There's not a lot available on this yet. It just came across in the Bloomberg terminal. But look at Super Microcomputer stock here. It's down another 33% pre-market, trading at just $33.92. And I just want to show you guys, this was a $114 stock back in March of this year. They took a dive earlier this year on that OrcaFin report that was picked up by Hindenburg Research and the failure to make the 10K. Now they're down another 1/3 this morning. And I want to send a shout out to Jaguar Analytics on X, who posted this one here. SMCI, Ernst & Young auditor resigns. We are resigning due to information that has recently come to our attention, which has led us to no longer be able to rely on management's and the audit committee's representations and to be unwilling to be associated with the financial statements prepared by management. And after concluding, we can no longer provide the audit services in accordance with applicable law or professional obligations. Ernst & Young is basically saying these guys are liars. You can't trust a word that comes out of their mouth. We don't want our reputation attached to their books. And so they are resigning. Look, better late than never. So good on Ernst & Young for doing this. They should have done this a long time ago. That being said, why did the OrcaFin find this? Why did Ernst & Young not find this information when a guy on Substack, now Beehive, was able to? Kind of makes you wonder, huh? Anyways, Super Microcomputer getting clobbered. Careful, guys. That AI bubble, it's getting close. Caterpillar misses estimates on weakening construction. All right, now let's talk about the real world, with things that you can build and touch and live in and walk on. Construction equipment, not selling so well. AI that tells us to glue our pizza together, chatbots, that's doing really well. Bulldozers and ditch diggers, not so much. Construction equipment sales fell 9% from a year ago, and they see 2024 sales and revenue slightly lower than expected. Caterpillar posted a third quarter profit that missed analysts' expectations as the machinery producer grappled with weakening demand in construction around the world. The maker of iconic yellow industrial machines reported adjusted earnings per share of $5.17 on Wednesday, missing the $5.34 estimate that analysts had expected. Caterpillar is viewed as a bellwether for the economy with its heavy equipment deployed at construction sites, mining operations, and energy projects across the globe. And here's the highlights here, guys. A big decline in sales. Sales of construction equipment, Caterpillar's biggest business segment, dropped 9% from the same period a year ago on lower sales volumes of machines to customers and lower prices. Interesting, lower prices. That's not something you hear much about these days. North America, along with Europe, Africa, and the Middle East region, were especially weak, with each geographical segment seeing revenue decline about 11 and 15% respectively. Sales in the segment to the Asia-Pacific region dropped 12%. So I was expecting the sales in China to be down because obviously construction industry has pretty much ground to a halt in China. But it's not just China, guys. Look, North America, Europe, Africa, the Middle East, Asia. So I don't know. We've got high hopes for South America, Australia, and maybe Antarctica because it's the only regions in the world that weren't showing double-digit declines in construction equipment. Big things happening in that Antarctic construction industry, guys. Seriously, it's a happening place these days. The company reported that mining equipment revenue fell about 10% also, mainly due to lower sales volumes. Energy and transportation was a bright spot, with the segment seeing a 5% boost. So Caterpillar stock here not doing so well, down about 2.75% ahead of the open at $376.74. Another one that has a lot to do with the real world economy, BASF. All right. They see earnings at the lower end of the forecast as China sales drop. Guys, BASF, this is a chemical giant. Their stuff touches pretty much everything. So again, this is a good bellwether for the economy. The company's revenue in the Asian market fell 10.5% in the third quarter. BASF is tempering expectations for the remainder of the year as sales decline in China and demand from automotive clients remains subdued. There's that weak auto industry again as well, something we've been talking about a lot here. The chemicals maker said Wednesday it expects to reach the low end of its annual operating forecast, which it confirmed between 8 billion and 8.6 billion euros. Analysts had guided for a 7.92 billion result. Still a slowdown in Greater China, where BASF sales fell 10.5% in the third quarter, as well as waning demand for automotive clients that struggle to sell electric vehicles are holding back growth. Revenue from BASF's surface technology segment, which makes products including coatings and paints used by car makers, slumped by 19% in the period. Guys, the car makers are selling about 20% less paint right now. Either they're making smaller cars, or maybe they're putting on thinner coats of paint, or maybe they're just making a lot less cars. Remember, we were just talking about Mercedes shutting down plants, about Stellantis shutting down plants. All right. Who else were we talking about? We're seeing this, guys. The auto industry is in big trouble here. Sales to automotive clients accounted for more than a fifth of the company's total last year. So China's hurting them and autos are hurting them. But you know what? Hey, AI is doing really well. BASF stock down about 2% here, trading at 44.38 euros. This is a German company. All right, let's talk a little bit about some economic data. Yesterday, we got JOLTS, and this was a bad miss for job openings in the U.S. The number of job openings fell by 418,000 to 7.443 million in September, from a downwardly revised 7.861 million in August, and well below expectations for 7.99 million. That is the lowest level since January of 2021, indicating that the labor market is cooling. And they were down pretty much across the board. Guys, you can see the number of job openings here. It's been falling steadily, a big step change down in this most recent month. Now let's zoom this out here. You can see a 5-year trend since the peak in 2022 in March, which is exactly when the Fed started their quantitative tightening campaign. Job openings have fallen almost every single month. Still, we've got this big step change from the pandemic, guys. That was basically work from home, where remote jobs began posted in multiple cities at the same time. But that is a big weakening in the job market. But then we got this data this morning that says the opposite. Private businesses in the U.S., according to ADP, added 233,000 workers to their payrolls in October of 2024. That is much higher than the 115,000 that was expected. And it's the most since July of 2023, following an upwardly revised 159,000 in September. So, you got some conflicting data here. ADP payrolls showing a big beat, JOLTS showing a big miss. We get the big jobs. Well, we'll get initial and continuing claims tomorrow. We get those on Thursdays. Then on Friday, we get the non-farm payrolls. So we got some conflicting labor data here. Now, let's talk a little bit about earnings. We got another AI story here. AMD shares fall as forecast fails to impress despite strong AI growth. Another dent in that AI narrative this morning. Look, AMD's earnings, we're getting a little short on time here. They were doing pretty well here. They reported third quarter results on Tuesday. Earnings in line with forecasts. Revenue was a slight beat here. AMD said its important data center business doubled in sales for the second quarter in a row. That's where their AI stuff lives. But overall revenue guidance for the fourth quarter was in line with consensus expectations, and AMD shares fell 7% in extended trading on Tuesday. AMD said it expected about $7.5 billion in sales in the current quarter, in line with the consensus of $1.16 in adjusted earnings per share on $7.54 billion in revenue. That would be a 22% year-over-year decline for the December quarter. And that last comment there, wow, that is a very light guidance from AMD there. A 22% year-over-year decline in revenue from one of these semiconductor, an AI chip maker. I feel like that's not getting the airtime it deserves, that statement right there. I'm used to, data center doubled from a year ago, up high double, triple digit percentages year-over-year growth. And now we're talking about a 22% decline for the December quarter. For AMD, that's one of the AI darlings. So that one kind of jumped out at me here. Now, AMD stock is paying the price for it, down 7.75% ahead of the opening bell here at $153.43. But in my opinion, what's going on with Super Microcomputer should be dragging down the whole freaking sector right now. Because if Super Micro is doing it, what's to say the other guys aren't doing it? All right, they did it and they got away with it for years. Now their auditor is resigning. I wouldn't be surprised, guys. That is NVIDIA's second or third biggest customer here. Now here's one of NVIDIA's biggest competitors forecasting a 22% decline. Unless I'm misunderstanding something in this article, guys, that is not a very good data point. Last one for earnings today. We got UBS earnings. Now, we're not going to spend too much on this. UBS profit beats expectations on Credit Suisse integration progress. So UBS had a pretty good quarter. They're, streamlining the company when they bought they bought Credit Suisse because the bank failed and the regulators arranged the sale. They've basically been running two separate banks on two separate systems for the last year. That's been very expensive. They started selling off unwanted assets from Credit Suisse, and they're slowly bringing Credit Suisse stuff into their own systems and integrating it. So they're saving a lot of money and bringing their costs down as they do that. That report resulted in some pretty good profits for them this time around. But the important thing in this story here, looking ahead, the bank said it anticipates a mid-single-digit decline in net interest income, the difference between what banks earn and pay on interest rates in their global wealth management, and a low single-digit decline in personal and corporate banking in the fourth quarter. So their guidance is a little bit light here, despite posting some pretty good earnings. And because of that, UBS stock is down 3.7% ahead of the opening bell here, trading at $31.60, despite that earnings beat. All right, let's talk. Now we got GDP here. This one just came out this morning. It's getting a lot of airtime. I don't think this story is that big. It was a slight miss at 2.8% GDP growth in the third quarter. The market was expecting somewhere between 3 and 3.1%. So, if you look at the chart here, we're just kind of humming along at 2.8, 3%, right? I mean, GDP it's a little disappointing this morning, but I'll be honest with you. Besides the headline number that's disappointing, besides the consumer spending up 3.7%, that's driven entirely by consumer debt expansion, a 10% increase or a 9.7% bump in government spending in this GDP numbers. Remember, guys, government spending is a component of GDP math. Government spending a year ago was already at obscene proportions, ridiculous levels. We were already running trillion-dollar deficits, and government spending is now up 9.7% from that already ridiculous level a year ago. Money does not grow on trees. I'm sorry if we're sounding like grandma talking to a 2-year-old, but you know what? Our elected officials have the mentality of a 2-year-old, and they probably wear the diapers of 2-year-olds too. Have you seen that guy recently? Maybe we should start talking to them like that, because it's got to stop, guys. The bond market is flashing the warnings. Gold is flashing the warnings. Bitcoin is flashing the warnings. Silver is. All right. They know what the government is doing is going to cause major problems, and probably soon, probably very soon. Nobody's talking about it, though, because we just hate the other guy so much in the election that, we're not going to talk about that. Not until the big bad orange man, or not before the cackling imbecile, not until we've vanquished our foe. Then later on, we'll solve the spending problem. No, we won't, guys. We've been doing that for 40 years. We will not solve the spending problem. I guess we haven't hit rock bottom yet, is what that means. But a massive increase in government spending led by a 14.9% increase in defense spending. That's not economic growth, guys. That is waste. That is warmongering. That is the military-industrial complex getting paid at the expense of the future, and it's got to stop. All right, Jack is now off his soapbox. We also got mortgage data here. Some interesting things. The average contract interest rate for a 30-year mortgage rose to 6.73% for the week ending October 25th. That is higher than the 6.52% that we got in the previous week. Mortgage rates continue to climb, guys. Now, check this out. On September 20th, that is the data point, the first data point we got after the Fed cut interest rates, we were at 6.13%. All right, so the Fed cuts the overnight rate by 50 basis points. We were at 6.13, and then the 30-year mortgage goes to 6.73. So the Fed cuts 50, mortgages go up 60, a 110 basis point delta in the direction of what the Fed is doing versus what mortgages are doing. It just goes to show you guys, if you're banking on lower interest rates to save or bail out one of your investments, or I'm in this company, a home builder, by the way, D.R. Horton, I didn't even talk about them. They got clobbered yesterday on a lack of home sales. So you can already see this happening. Pay attention, guys. The interest rates on the long end of the curve, those 30-year mortgages, 10, 30-year treasuries, the Fed does not directly control those. And interestingly enough, even though we got another big increase in mortgage rates, mortgage applications to refinance a mortgage sensitive to short-term rates, they fell by 6% in the previous week. But interestingly enough, there was a 5% increase in applications to purchase a new home last week, even though mortgage rates rose. I don't know what to make of that data point. 5% surge. I don't know if surge is the right word. A 5% bump in applications to buy a home despite interest rates rising by 20 basis points. Is that people just giving up on lower rates and saying, forget it, FOMO, I'll just buy a house now? Let me know what you think in the comments of that one, guys. That one kind of stuck out at me as pretty odd, that applications to buy a home would go up in the face of higher mortgage rates. And I just want to say thank you so much to Mr. Lance for being a awesome melon head, and for the super chat. Thank you, Lance, for sending the super sticker. Oh, it's not coming up, so I can't see what it is. But I appreciate the support of the channel, Lance. Thank you so much. Super chats don't always pop up on screen. Let me make sure Mish didn't send me anything. Nope, we're good. Also, Charles G., thank you, sir, for the super chat, the support of the channel. He says Pepsi closed a plant in Chicago too. You know, was that recently? I saw something about a Pepsi plant in Chicago closing down. Sorry, I get a lot of these emails day in and day out, and sometimes I get my wires crossed. It was very unexpected, if I recall correctly. I got to put a pin in that one, Charles. I do remember reading about that one. There's a lot of plants are closing, guys. The manufacturing PMIs are way down. They've been down for, like 20, 30 months in a row, depending on which PMI you're looking at. Manufacturing in the U.S., we're hearing about this resurgence. We're hearing about reshoring and bringing all the manufacturing home. And I get that. And yeah, we're building the EV plants that are shutting down as soon as they're built, or we're canceling construction. And yeah, we're building data centers and we're building chip plants. But everything else, the plants are closing, guys. We're seeing food packers are closing. We're seeing auto plants are closing. A Pepsi plant is closing. Restaurants are closing. Manufacturing, restaurants, not really a manufacturing subject, but manufacturing in the U.S., despite the narrative of rehoming or reshoring, it really just isn't happening there. And that's a good example there, Charles. Thank you very much for that and for the support of the channel. And also, thank you so much to Mish. Mish, thanks, buddy, for doing that. He gifted 10 Nobody Special Finance memberships from Mish the Mod. Thank you, sir, for supporting the channel with everything you do, your research assistance, and your services as a Blue Wrench. Guys, if you got one of those memberships, be sure and say thank you to Mish. Thank you, brother. I appreciate the super chat, sir. And Steve Canyon, thank you, sir, for the super chat. He says the Fiscal Responsibility Act, I'm sorry for giggling at the title, the Fiscal Responsibility Act, which approved unlimited debt and spending until January 2025, most likely responsible for the 10% increase in government spending. The act became law in June of 2023. Funny you should mention that, Steve. Let's look at the debt ceiling, because that right around that time, let me shrink me again. I believe that's right around the time that the reverse repo started to climb again. Let's look at the reverse repo chart. What did we say? June of 2023? I think it was May of 2023 when they passed it into law. But when did reverse repo stopped falling? Right around, I guess you could say right around June is when it leveled off, maybe April. Never mind on the reverse repo. But if you look at the M2 money supply, well, if you look at the money supply, well, that never stops going up. Money supply growth resumed in earnest really around October of last year. It leveled off around the end of May. That was the debt ceiling debacle when they finally reached an agreement. A few months later, the money supply started growing again, and the money supply has been growing ever since. We've got about $700 billion in new money versus where we were a year ago in October 30th. Where did that money come from? I thought the Fed was still doing quantitative tightening. Why is the money supply growing if the Fed is still doing monetary tightening? That's interesting. Maybe it's got something to do with the Fiscal Responsibility Act. Thank you, Steve Canyon. Appreciate the generosity, sir. Super chat, support of the channel. Congress, you're drunk. Go home. Lisa B., thank you so much for being a melonhead. Says, love the honesty and deep dive. CNBC put to shame. CNBC puts themselves to shame, Lisa, but I'm happy to contribute to that. Thank you very much. And thank you for everything you do for the channel as well. I appreciate you being a melonhead for 8 months. And Mighty Mike, what's going on? SMCI, you nailed it. You know, I mentioned as soon as I found out that their 10K was delayed, I said the next thing you're going to hear is SMCI is excited to announce their new auditor. So we're a little out of order. We had a couple of months went by, and now their auditor is resigning. So SMCI is going to have to find themselves a new auditor who's going to either rubber stamp their books, or they're going to have to go back and restate 2 years of earnings. I don't know which one's going to happen. I'm sure they could find some crooked, nobody accounting firm who's willing to sign off on their books if they write a big enough check. But guys, this is a major red flag for SMCI. It's exactly what I've been saying. Well, maybe not exactly what I've been saying, but it's along the lines that this whole AI mania bubble is one giant accounting gimmick, but it has now reached such levels. I mean, the last I looked, the S&P had added $16 trillion in market cap since the AI bubble began. And now we're probably closer to 18 trillion, to be honest with you. It's gotten so big now. If you add up all of this, I just think it's going to be the biggest accounting scandal in history by the time the dust settles from this. I don't think SMCI is the only one. Well, we know they're not the only one. I just got done on DNN talking about Evolve the other day on Monday night when we did DNN with Travis and Melody. I was talking about this AI firm Evolve. They're basically saying, we looked into our books and you can't trust any of our financial statements for the last 2 years. Now SMCI's auditor quits. We're going to hear more about this, guys. Now, is this the pin that pops the bubble? I don't know. Probably not, because we still have all the big tech earnings this week. So, we're going to hear from Microsoft, and they're going to say our data centers sold so much. And then we're going to hear from Meta. Oh, our AI did so much, and Mark Zuckerberg is a tool. And then we're going to hear from all the other Apple Intelligence. They're going to make all these cockamamie claims about AI. And CNBC and Bloomberg, they're just going to pound the table on all those data points. And then they're going to be like, oh, yeah. Oh, by the way, SMCI's auditor quit. Never mind. Buy stock. Anyways, when the dust settles, I tried to warn you guys. That's all. That's all I can do. Thank you so much, Mighty Mike. I appreciate the super chat, sir, and the support of the channel. I told you we had a packed show for you today, guys. That was a lot. Thank you for drinking from the fire hose with me this morning, everybody. Thank you so much for the generosity in the super chats. Thank you to all my channel members and magnanimous melon heads on YouTube and Patreon. You guys are awesome. Looking forward to our Zoom call at 5 p.m. Eastern time today. Get together once a week on Zoom. Links down below to all that good stuff, should you feel so inclined. Hi, Mom. Hi, Dad. I love you guys. And did I miss one? No, I did not. Everybody, till next time, live small and dream big.